Coming up on Market to Market. California wildfires go from bad to worse in just a few hours. Combating food waste could be as easy as saying there's an app for that. And two brothers turn an FFA project into a major operation. Those stories and market analysis with Elaine Kub next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, August 19 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The Olympics bring together the best athletes in the world to compete for gold. And domestically, some sectors of the U.S. economy are performing better than others. Apartment construction helped fuel a run-up in housing starts in July. According to the Commerce Department, the overall rate rose 2.1%. There was some improvement in the health of the Rural Main Street Index, but the 41.1 mark is still below growth neutral. The Creighton University survey is on a 12-month down streak, driven mostly by weaker agricultural prices. However, a dwindling U.S. dollar is helping build interest in domestic products overseas. The greenback was at its lowest level in 18 months on Thursday. One benefactor of a flagging dollar is crude oil, which rallied to a 5-week high. California is the nation's bronze medalist in oil production. But this week, they were reluctantly at the top of the medal stand when it came to wildfires. Paul Yeager reports that even as crews made progress, there is a massive challenge ahead.
The towering inferno known as the California wildfires surged this week as hot and dry conditions did little to assist emergency personnel. A fast-moving fire at the Cajon Pass region, 60 miles southeast of Los Angeles, has been difficult for firefighters to contain as more than 82,000 people were forced to evacuate their homes just minutes ahead of the flames. At least 40 square miles of mountain terrain and desert of Southern California burned this week. The fires tore through canyons and flew over ridges with astonishing speed, sending flames 80 feet into the air. California Governor Jerry Brown declared a state of emergency hours after the blaze started, a move normally reserved for use after several days of massive natural destruction. The opposite weather disaster is happening in the Bayou region as torrential rains have led to massive floodwaters. Thousands in southern Louisiana were forced to leave their homes after several feet of rain fell in some areas. At least 13 people have died. For Market to Market, I'm Paul Yeager.
Almost half of all food produced in the U.S. is destined for landfills. The federal government is pushing the nation's entrepreneurs to cut food waste in half. A myriad of approaches are in play to tackle this burgeoning problem. Currently, there are more than 2 million apps available for download. And as Tracy Brown of the Associated Press reports, one of them might be the answer to solving the problem.
Every day, across the country, tons of spoiled, rotten or unappealing food is being thrown away. Decades of cheap, plentiful food have left Americans with a carefree attitude, and the consequences are piling up.
Food waste is a staggering problem. We've got about 40% of the food that is provided in the United States is never eaten.
Money that's literally being thrown away.
If you're a family of 4, you're wasting $1,500 of food every year. And it's roughly 10 cents of every American dollar spent on food. So we're talking big dollars.
The Environmental Protection Agency says food produce is the single biggest source filling up American landfills. Last fall, the federal government kicking off a campaign to fight the massive waste with a goal of cutting it in half by 2030. and people are starting to take notice. In suburban Washington, the non-profit group Nourish Now is seeing an uptick in food donations, as well as increasing demands from food insecure people.
Every day we get almost 1,000 pounds of recovered food, all food that would typically get thrown out. So we're going to restaurants, catering companies, cafeterias, bakeries, any place that might have food waste, and we're diverting it from the landfill.
In Chicago, the group 0% turned to a high-tech solution to divert produce from the dumpster, using smartphones and drivers to connect food donors with recipients.
So a supplier says, we have 15 sandwiches that are available between 2 and 4 p.m. today. That goes into our system. Step one, it's matched with the need that has already been established in the community.
A key factor in the staggering amount of waste is the confusion about expiration dates on food, leading too many to adopt, when in doubt, throw it out. Democratic lawmakers are proposing a federal bill to simplify food labels.
To clarify and simplify and standardize the labels indicating dates on food so that people know what it means for there to be peak quality and what it means that food is unsafe to eat.
Tracy Brown, Associated Press.
The new American dream may be to own your own business. The nonpartisan Kauffman Foundation issues an index of Main Street entrepreneurship. The most recent report reveals a 2-year upswing after its lowest level in more than a decade. As some employees dream of working for themselves, Delaney Howell has our cover story on 2 brothers in Missouri who are already living that reality.
According to the USDA, as of April 2016, cage-free and organic hens account for 30 million birds, nearly 10% of the domestic flock. The Stanton brothers of Centralia, Missouri count their birds as part of that figure. Dustin, 23, and Austin, 19, built their business with hard work, and after nearly a decade of diligence, they are the proud owners of the nation's largest free and open-range egg operation. But the roots of Stanton Brothers eggs stretch back even further.
The business actually started in the first grade through a 4-H incubation project. The class incubated 6 baby chicks, and from that project, one of the kids got to take them home. I was the only kid one of those baby chicks until the very last day, and then another girl also wanted them. She put her name in the hat to try to win them, and she did win them. I came home a little teary-eyed, but my uncle was here, and I told him my predicament. He ended up buying me my first 6 baby chicks, and that was how it started. And it was just an allowance at that point.
Dustin's first attempt at raising chickens included an old chicken shed that had fallen in, some 5-gallon buckets, and a set of old chicken feeders. Since then, the operation has grown to nearly 20,000 layers in 5 buildings. And recently, the pair built a state-of-the-art structure along with the help of their father. The brothers prefer brown highlines and bovines as their breed of choice because they are easy to handle and convert small amounts of feed into large eggs. In 2007, Dustin joined the FFA and bought 500 layers to use as his SAE, or Supervised Agricultural Experience Project. Following the leap in egg production, the brothers decided to jump into retail, selling their bounty at the Columbia, Missouri Farmers Market. For the first 3 weeks, they faced horrible weather and low sales. By the 4th week, they were ready to quit, but they ended up selling 40 to 50 dozen eggs. The bump in pay was enough encouragement for Dustin and Austin to continue traveling to Columbia, Missouri every Saturday morning in the summer for the past decade. The pair sell an average of 400 to 500 dozen eggs every week. Karina Smith, market manager for the Columbia Market, has worked with the brothers since beginning her position as the manager for the past 3 years.
I think customers have kind of the same feeling as I do. You know, they really appreciate, that the boys started this as when they were younger, and they worked their way up to as successful as they are now, and they all love their eggs too.
Their farmers market stand is visited mostly by returning customers who look for the iconic giant stuffed chickens. Dustin and Austin also count college dining halls, numerous senior care facilities, restaurants, bakeries, and supermarket chains among their customers. Weekly rounds include Hy-Vee, Schnucks, and Dustin's alma mater, the University of Missouri. The Stantons got their product onto the shelves of a Missouri Hy-Vee after customers recommended their product to the store management. Sarah Bartow Fuller is the assistant merchandise manager at the Broadway Hy-Vee in Columbia, Missouri.
They're our #1 selling egg for sure. They even outsell our Hy-Vee Health Market brand, which I'm probably not supposed to say, but they are a very good selling egg.
The Stantons have lived within a mile radius of their original homestead in Boone County, Missouri, since the family emigrated from Ireland in 1845. Although the details of the Stantons' lineage are murky, Dustin and Austin have been either the 6th or 7th generation to be involved in farming in mid-Missouri and have a desire to remain on the family farm for as many years as possible.
It's not really the business as a goal, it's just staying on the farm. That's been the main goal for both Austin and myself. We've always wanted to stay on the family farm, and it literally can't sustain 30 families in the future, both our parents, Austin, and myself. And so to kind of diversify and get away from it, I've kind of counted the egg business and the Stanton Brothers side of things as our off-farm while being on the farm income. So we're still able to help on the farm with the daily things with the cattle, the crops, the mechanics, and things like that. But the eggs is what helps keeps us here.
Diversification and expansion are always on their minds. The brothers were intrigued by their ancestors' involvement in the potato industry, and Austin spurred a transition to expand their operation.
My brother had a paper he wrote for his, I guess, senior year. So I found his paper and I'm like, potatoes, that's a great idea. So I ran with it. And it also goes back to ancestors. Whenever we came from Ireland, we came from the potato famine and they grew potatoes in Ireland. So why not grow potatoes now?
The Stanton brothers are kept busy with more than just eggs and potatoes. Both help their father manage 400 acres of milo, which is used to feed their flock. They also help with the family's 80-head cow-calf operation, and recently the brothers expanded operations to include a honey-based ice cream, which they sell at local retail outlets.
As far as splitting everything up, Austin's very hands-on, and so he's actually going to school for an Ag Systems Management degree, which is a more hands-on degree. And so he does a lot of the production side of things, and I do a lot more of the book and record-keeping things.
The two are well aware their success was made possible with the help of their parents, Andrew and Judy Stanton, as well as their 3 part-time employees who help with day-to-day operations including egg collecting, washing, packaging, processing, and distribution. Almost all of their business expansion has been by word of mouth, as was the case with Hy-Vee, which has given the two more time to spend on other aspects of their business.
I'm at that point where I'm kind of just focusing on the business, and I come to find out I have less time now than I did when I was in school.
But even as the business continues to grow and expand, their true success lies with the bonds cultivated through generations of dedication to family and farming.
Working as a family farm it's very a cool thing to do, because whenever you're thinking about a family business, you think everyone works together, and whenever you sit down to eat or go on a car ride, you all know what's going on with each other's lives. And so it's just really good because you get to build that communication with your family, get to know what's going on with each other in their lives, and you also get to work together, so it's a really neat thing to do.
For Market to Market, I'm Delaney Howell.
Next, the Market to Market report.
A sorting of the grain from the chaff saw traders pushing the market higher. For the week, September wheat increased a nickel, while the nearby corn contract broke a 2-month losing streak and gained 12 cents. A return of the bean oil market helped fuel the soy complex this week as the September soybean contract added 28 cents. September meal declined $2.50 per ton. In the softs, December cotton continued to tumble dry on hot, down 11% in 2 weeks to shrink $2.62 per hundredweight. Over in the dairy parlor, September Class 3 milk futures rose 83 cents. The livestock sector tumbled again as the October cattle contract lost 427, September feeders shed 370, and the October lean hog contract ended positive for the second week with a 193 expansion. In the currency markets, the U.S. dollar index dropped again, this time 120 points. Crude oil gained $4.03 per barrel. Gold added $3 per ounce. And the Goldman Sachs Commodity Index increased more than 20 points to finish the week at 370.40. Here now to lend us her insight on these and other trends is one of our regular market analysts, Elaine Kub. Elaine, welcome back.
Wonderful to be here.
We're glad to have you. Let's talk about this wheat market. Spring wheat harvest is moving right along. We're 65% complete. This wheat market still is not breaking lower. We're treading water.
Yeah.
Is that positive?
I think it is. I think it is as part of a broader story. I mean, wheat, we cannot say anything very nice fundamentally for wheat. You can sort of point to Europe. The French wheat yields are at a 30-year low and they have poor quality. And so you are seeing some of that reflected into the USDA tables where they are increasing the feed demand. Some of this wheat is working our way, and then that's a bearish story for corn, so we can talk about that as part of that story. But really, other than that European story, the wheat market doesn't have anything very nice, positive to say price-wise, except for the broader economic picture or the broader commodity picture where that lower dollar has helped to boost commodity prices this week. And we may continue to see the investment market or the investors coming into the commodity markets as a hedge against inflation. So, next week, that's really going to be a headline to watch for.
Okay, so hopefully we'll continue to slowly move this market higher on broader news.
Yeah, I think so. Like I mentioned, so next week, the Jackson Hole Conference, Janet Yellen is going to be speaking. There's going to continue to be all of this guessing and second guessing about when the Fed might raise interest rates. And we don't ordinarily think that higher interest rates are a good thing for farmers or for the ag markets, but they may be, in that it may attract more of the investment money to be going long. And we're already seeing that in the Commitments of Traders report. We're already starting to see the investment side of the market bringing in more new positions, both long and short positions, but favoring wheat, frankly.
Okay, well, now let's talk about corn. You mentioned that we're losing corn feed to wheat as these wheat prices continue to be so cheap, especially on a cash basis. Yet corn is up 10 cents on the December contract. New crop exports have been very strong. Where can we push this market to?
I don't know that we're really, this is the middle of August. We're looking down the barrel at a 15 billion bushel crop. This is the time frame to be freaking out about potential harvest bearishness coming down the line. I don't know that we're going to be able to push it much more bullish, except for, I think this 10 cents this week was based on the dollar going lower and, like I mentioned, the investment money coming in. But fundamentally, I don't think that we can anticipate a 15 billion bushel crop and start to think about higher corn prices.
Is the trade, in your estimation, do they believe that 15 plus billion bushel corn crop number today?
Maybe. But I think the conventional wisdom is once that report came in, everybody sort of believed that's about as bearish as it's going to be. From this point forward, it can only really get corrected bullishly, right? That number can only be trimmed from this point forward. And we're seeing the commercial side of the market going long. Folks seeing this $3 new crop corn prices for cash prices and locking that in if you're a feeder or an ethanol producer. Absolutely.
All right. Well, now let's talk about the soybean market. Bean oil takes center stage, and I want to launch with a question from Phil in Ontario, Canada. Phil is asking, how will the greater vegetable market impact soybean prices?
Veg oil market. And absolutely, Phil has locked on to, I think, the hidden factor behind some of the higher prices in the entire grain sector this week. So last Friday, when we had this big bearish report come in, and it was bearish for soybeans too, with a 4 billion bushel crop, that's another huge crop, but coincidentally or not, that same day, the Malaysian palm oil market was skyrocketing, and it has continued to skyrocket this week. There were at least a couple of days where it went up by 2% each day. So there's a lot of bullishness, that arbitrage where you could replace into the Chinese vegetable oil market. That's the market that's really driving, needing to get some more edible oils into their markets. That's what's driving the soybean oil, which is driving the soybean complex, which is just contributing, some bullishness to the entire sector.
From a market structure perspective, how long can we have a divergence between bean oil and bean meal? I mean, how wide can that spread get? How long can bean oil lead a bean rally?
The bean oil can continue to lead it. I think, building on that, a broader question is how long can soybeans continue to be 3 times the price of corn? That's something that feels like really dangerous, potential for the soybean complex entirely to fall apart based on that difference. And to look at the difference between soybean meal and corn, as all of this whole feed sector, these things have fundamental price relationships that eventually they will snap back to. I don't know when, I don't know now, but sometime.
So how do you trade? How do you find that arbitrage opportunity between these discrepancies?
Yeah, I mean, you just have to time it correctly. I think right now we are seeing the funds continue to be going long in soybeans, soybean oil, soybeans, and short in corn. So they're still expecting this price relationship to continue or to even expand. But someday it's going to have to, someday unless the fundamental relationship between soybean yields and corn yields changes dramatically, someday that price relationship is going to snap back to 2.5.
So are you selling beans and buying corn down in here?
If you're willing to pay the margin calls for a very long time, I predict that eventually that trade would work, yes.
Okay, but the market can stay irrational longer than you can stay solvent.
Exactly.
So with a grain of salt. Real quick on cotton, we continue to break this market down. We broke down through $70. Where do we find support?
Well, I think there is, a general idea that it will consolidate around the $65 level or above 60. But, there was some nice news in the WASDE report about, slightly better demand from China and India. There was, potentially someone would get worried about the flooding in Louisiana that you guys showed at the top of the show, but that's not really in the cotton areas. So nothing has helped it. Nothing has really helped it very much. And I think we're just hoping for consolidation.
Reverting back to our 2-year trade range. All right. Let's talk livestock. Live cattle down $4, trading around $110 again. On the futures side, the board or the cash side, I guess I haven't heard Friday afternoon if there had been much trade.
Thursday's business was about $1 down this week, so not really falling apart, no.
Okay, where do you see us heading from here?
Well, we did have the cattle on feed report today, so I think that could get a bearish interpretation on Monday. I think we have to be a little bit worried about retesting going below that 110 level or retesting July's low of 107. If this cattle on feed report had not come out, I wouldn't be worried about that at all. I would feel that was in the past and the trend would be going forward. But what we saw that was not expected is we saw placements up about 2%, which, in the whole industry, we're expecting to see the cattle herd expanding by 2%, no big deal. But I think the market was expecting not to see such high placements with the idea that there would be more of the calves staying on grass. Now, I never thought that because I know that the Corn Belt itself is not experiencing drought, but a lot of the western cattle country, your Montana, Wyoming, western South Dakota, western Nebraska, is experiencing drought. And so I'm not surprised that we did continue to see the cattle coming into the feedlots in July.
Pushed them off the pasture onto feed a little sooner than the trade was anticipating, and that's what you worry might create some downward price potential come Monday.
Yeah.
Feeder cattle, same story. We're down. Placements were up. I mean, we do have more calves coming on the ground.
Yeah, we are in danger. Yeah.
In danger to what? Where's the downside here, Elaine, in the short term? Let's talk fourth quarter.
Yeah, I mean, when you look at the all of the calendar contracts there, it just erodes month by month by month, and you're looking at a 130 price when you're going into the spring contracts. So I think that is the expectation, that we'll continue to see more animals and sort of price erosion. I think that those are the dangerous numbers. Yeah.
So if I'm a rancher, should I be selling those 130, 125 spring calves today?
It might make some sense to get some protection in here because the feedlots aren't making money either. They're not going to be able to pay up necessarily. I think there is danger in the feeder cattle market, yes.
Okay. Lean hogs. This hog market, we broke the dollar, saw a little rise. Have we actually seen export demand increase, or is it mainly hope at this point?
I think that this is another investment-led rally because fundamentally, exports aside, fundamentally from the supply side, this is a very bearish market. We're continuing to see very large weekly numbers. And in August, you would ordinarily expect to see the weights maybe drop, but because of the heat, that has not happened this month. So it's all bearish from a fundamental side. So to see that rally this week and to see it confirmed in, like I said, in the positions of the investors, I think that's who's leading this.
Okay. Do you take advantage of this as a pork producer and hedge the market?
Sure, absolutely. But I think there may be continued opportunities ahead if we do continue to see interest in the broader commodity sector. I don't know that it's going to fall apart, but it's nice that it has happened.
You bet. Now, as you were talking about Jackson Hole, the meeting of the FOMC next week, as we sit here today, the dollar closed on Friday at 94 and change, 94.483. Looking ahead to that meeting, do you buy or do you sell the dollar index? What direction is it going to go come Janet Yellen's comments next week?
You know, it's really interesting that it has fallen apart this much because honestly, there should be a positive correlation between the idea of interest rates going up and the dollar should also be going up. But it's not a hard and fast rule. I think what's actually happening is that you've got investors who are now finally seeing enough optimism to take their money out of money market funds and to stop hoarding the cash and to actually be putting it into some investments, into diverse, lots of asset classes. So actually, I think that the dollar, regardless of what interest rates may do, we may continue to see money coming back out of cash. That's a good thing.
There is a lot of cash sitting on the sidelines, and so you would expect that to move into equities as well as commodities and see it across the board.
Yep, that's the prediction.
So is crude oil done climbing?
Maybe. I mean, it's climbed quite a bit, right? And the ethanol industry has benefited from that, but I think that the crude oil rise has risen pretty fast, pretty quickly.
Might be ready for a brief sell-off.
Yes.
All right. Well, Elaine Kub, thank you so much for taking the time to join us this week.
It has been a pleasure.
That wraps up the broadcast portion of Market to Market, but Elaine and I will keep the market conversation going, including answering more of your questions during Market Plus, available on our website. Which one of our analysts grew up on a potato farm? Check out our newest podcast called M2M to hear that story and others. You can listen on our website or find it where you regularly download podcasts. And join us again next week when we hear from a group of antique tractor collectors who are harvesting a bumper crop of history lessons. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.